What is a tax abatement in property taxes? Have you ever wondered how some property owners manage to pay less in property taxes? One way they do this is through something called a tax abatement. So, what exactly is a tax abatement in property taxes? Let's break it down. A tax abatement is a temporary reduction or exemption from paying property taxes on all or part of a property's assessed value. This is often arranged through an agreement between a property owner, such as a business or developer, and a local taxing authority like a city or county. The main goal of a tax abatement is to encourage investment or development by lowering the tax burden for a specific period, which can last anywhere from 10 to 20 years. When a tax abatement is granted, it reduces the amount of property tax owed. This can happen in two ways, either by lowering the taxable value of the property or by exempting part of the property from taxation. It's important to note that abatements usually apply only to the increase in property value due to new construction or improvements, not the original value. The specifics of each abatement can vary widely. For instance, a business might agree to pay only 50% of the taxes for 20 years or have a gradual increase in tax payments over several years. Some abatements even freeze the property tax at the pre-improvement level, meaning that even if the property's value rises, the tax bill does not increase during the abatement period. Tax collectors play a vital role in this process. They are responsible for enforcing the collection of property taxes, including those adjusted by abatements. Since abatements reduce the taxable base, tax collectors collect less revenue from properties that have received this benefit during the agreement term. Local governments often use tax abatements as tools for economic development. They aim to attract or retain businesses, stimulate construction, and revitalize neighborhoods. However, these abatements requiring formal agreements that specify the terms, including the length of the abatement, the percentage of tax reduction, and the qualifying improvements. The process of obtaining a tax abatement typically involves local government budget planning and approval cycles. Once approved, the abatement usually takes effect in the calendar year following the agreement. In practical terms, businesses that expand their facilities may receive abatements on the increased property value. This helps lower their operating costs and encourages growth. Residential tax abatements can also be granted for new housing construction or significant renovations, particularly in designated districts aimed at neighborhood revitalization. Abatements can be structured to phase in tax payments gradually, easing the financial burden on property owners. Local governments must balance the short-term loss in tax revenue against the long-term benefits, such as job creation and increased economic activity. In summary, a tax abatement in property taxes is a negotiated reduction or exemption designed to incentivize property improvements or development. It plays a significant role in local tax policy and economic strategies, with tax collectors responsible for implementing the adjusted tax assessments during the abatement period.